students, this is the third video related with the subject cost and management accounting for the third semester BBA students, and in this video I included the portions which covers the elements of cost sheet, its components and its normal format. And first we can look what are the elements of cost. Elements of cost. This chart shows which are the elements of cost and its major classification. From this, we can understand that mainly there are three elements. They are material, labor, and expenses, and each of them have two divisions such as direct and indirect. That means material have two divisions: direct material and indirect material. Labor, direct labor and indirect labor, and for expenses, direct expenses and indirect expenses. And all the indirect expenses are collectively known as overheads. From the next slide onwards, we can clearly understand about the meaning of direct and indirect, all these material, labor and overheads. First one, direct material and indirect materials. By taking an example of manufacturing or stitching of a shirt, to stitch that shirt, we want cloth. So that cloth used in the stitching of that shirt can be considered to be the direct material, whereas the lubricants or oil used in the weaving machines in order to increase the speed of that machine, that makes the indirect materials. That means those materials which can be easily identified or directly identified from that product can be considered to be the direct material, whereas those material which do not form the part of a product, that can be considered to be the indirect materials. Then the second one, direct labor and indirect labor. All labor that is directly involved in production process, that means for in the process of converting raw materials into finished goods or altering the construction, composition and condition of the product is termed as direct labor. And so the remuneration paid to that direct labor is known as the direct labor cost or direct wages. In case of indirect labor, they are not directly engaged in that production. For example, the salary paid to a manager. So we can understand that the manager is not directly engaged in the production process. Instead of that, they are managing some activities. So he is not directly engaged in that production process. So the salary given to a manager is an indirect labor, and the wages given to the workers is a direct labor. Then the third one, direct expenses and indirect expenses. Expenses other than direct material or direct labor which are specifically incurred for a particular product or process can be termed as direct expenses or chargeable expenses, like direct material or direct labor. These are also, it can be also identified directly from that production process. For example, charging of excise duty or the royalty, it can be directly identified from the production of that product or process. But in case of indirect expenses, for example, the advertisement expenses beared by the company, we know they usually give advertisement as a part of their sales promotion. So it is related with their sales of that product, not related to the production. Likewise, the rent paid for that building or the insurance premium they paid, etc., are the examples of indirect expenses and which cannot be directly identified from the production of that product. The sum of indirect material, indirect labor and indirect expenses can be termed as overheads. Cost sheet. The preparation of cost sheet is one of the basic functions of cost accounting. For the purpose, cost information has to be analyzed under various elements, functions and behavior, and it should be presented in the most intelligible manner. So that's why a cost sheet is prepared to show the different elements of cost. The different elements of cost, as we already discussed, but along with these elements of cost, some more items are included in this cost sheet. So now we can look how we can prepare a cost sheet and what is the format we have to follow while preparing. This is the format of a normal course sheet. So in order to prepare a course sheet, we have to draw a table like this, which includes 3 columns. And top of this table, we have to write the course sheet of which company or for which product. And for the period, there must be write the date they given in the question paper. And the number of units at the right side, right top, because it is necessary for the calculation of per unit cost. So we can look what are the 3 columns include. First one, the components of cost, then second one, the total cost, and the third one is the per unit cost. In some questions they didn't ask us to prepare the per unit cost column, so for that questions there is no need for writing that. Then we already discussed about what are the elements of cost. So first we have to write that 3 elements. They are direct materials, direct labor, direct expenses. The sum of these 3 elements constitute prime cost. So prime cost is the sum of direct materials, labor and expenses. Then by adding factory overheads, we get factory cost or work cost. Then by adding administrative overheads, we get cost of production. Then by adding, if there is the opening and closing stock of finished goods, we have to add opening stock and have to less closing stock. So while by adding opening stock of finished goods, and along with that we have to less closing stock of finished goods, we get cost of goods sold. So along with that cost of goods sold, by adding selling and distribution expenses, we get cost of sales. So from that cost of sales, we have to find out the profit or loss earned from that production. In certain questions, they directly give us the amount of total sales. So it's very easy to calculate the profit or loss earned from that production. If the cost of sales is less than the amount of sales, there will be profit, and in vice versa, there will be loss. That means, for example, if the sales is 6 lakh and the cost is 5 lakh, the difference is 1 lakh. That means here the cost of sales is less than that of sales, so we get 1 lakh as profit. In the opposite case, it will be loss. So this is the format of a normal cost sheet. The main components of a cost sheet are prime cost, factory cost of work cost, cost of production, cost of goods sold, cost of sales and other things. Next, we can look what are the components of cost sheet, and it can be easily understood from the equations. First one, prime cost. It is the total cost of direct materials, direct labor and direct expenses. It's also known as basic cost. In certain questions, the materials, the amount of direct materials will not be given. So in that situation, we have to find out the cost of materials used. For that, we have to use the equation that opening stock of materials plus purchase of materials minus closing stock of materials. Then the second one, factory cost. It is also known as work cost, production cost or manufacturing cost. Factory cost refers to the total cost incurred in the production stage. So it can be calculated by adding factory overheads along with the prime cost we already get. So we can also say that the factory overheads are the indirect material, indirect labor and indirect expenses incurred in a factory. Then the third one, cost of production. The cost of production is also known as office cost, and it can be defined as the cost which is arrived at by adding office or administrative overhead to factory cost. So here the administrative overhead refers to all costs that are incurred on management, maintenance of accounting records, office records, etc. Then the fourth one, cost of goods sold. At the end of an accounting period, some quantity of the goods produced may be in stock as unsold goods. So the value of goods in stock should be necessarily adjusted to find out the cost of goods sold. In order to find out the amount of cost of goods sold, they will give the information about the closing and opening stock of finished goods. So we have to add opening stock of finished goods, cost of opening stock of finished goods with cost of production, and have to less cost of closing stock of finished goods. So we get the cost of goods sold there. Then the fifth one, cost of sales. It is the sum total of cost of goods sold and the selling and distribution overheads. The selling and distribution expenses are the expenses incurred in the process of selling goods. So we get the amount of cost of sales by adding selling and distribution expenses along with cost of goods sold. Then the last one, sales. It represents the amount at which goods are sold by that company. The profit or loss of that business depends on the amount of sales and cost of sales. That means if the sales exceeds the cost of sales, it will be profit. If the cost of sales exceeds the sales, it will be loss.